Okay, so you opened your investing app this morning and immediately wished you hadn't. Everything's red, like aggressively red. Your portfolio looks like it got into a fight and lost. This month, the market dropped over 4% in a single day. $1 trillion gone. Poof. And the news is out here screaming AI bubble, inflation, oil prices, like the world's ending. And your first instinct? Sell everything. Hit the eject button. Save yourself. Hey, I'm James. Welcome to Money on Paper, where we make money make sense. And in the next 8 minutes, I'm going to show you why selling right now might be the single most expensive mistake a beginner can make. And the 3 calm moves that actually work. So put the phone down, step away from the sell button. Let's talk. First, let's figure out what's even happening, because fear gets a lot smaller once you put it on paper. There are basically 3 things spooking the market right now. Number 1, tech stocks. We've had 2 wild years of everybody losing their minds over AI. So now investors are going, wait, are these companies actually worth this much? And when the big tech names sneeze, the whole market catches a cold. Number 2, inflation's being annoying again. Prices came in hotter than expected, which makes everyone nervous that interest rates stay high. Number 3, global drama. Some tension overseas, oil prices bouncing around. And if there's one thing the market hates more than bad news, it's not knowing. The market's basically that one friend who spirals if you leave them on red. But here's the thing nobody's saying on the news. None of this is new. Tech scares, inflation, world events, the market has been through every one of these, many, many times. What feels like a 5-alarm emergency is, historically, honestly kind of a regular Tuesday. Now let me show you the most important chart in all of investing. Ready? This is the market this week. Terrifying, right? Looks like a heart monitor flatlining. But watch what happens when I zoom out. 1 year, the drop's already smaller. 5 years, it's a little wiggle. 30 years, where'd it go? You can barely find it. Look at this line. This line survived 2008, when the market lost half its value. It survived 2020, when it fell over 30% in like a month. It survived the 2022 slump. Every single one of those felt like the end of the world while it was happening, and every single time, it recovered and went on to new highs. Get this, drops of 10% or more happen about once a year. They're not a glitch in the system. They literally are the system. The dips are the toll you pay for the best long-term returns out there. The people who get hurt aren't the ones who go through drops, that's everybody. It's the ones who sell during them. Okay, so let me show you what panic selling actually costs. And fair warning, this number kinda hurts. 2 investors. The first one just leaves their money alone. Scary headline, doesn't care, naps through it. The second one sells every time things look bad and buys back when it feels safe again. Sounds smart, right? Here's the problem, safe always shows up after the recovery already started. So they keep buying high and selling low, which is, the exact opposite of the plan. Because here's the cruel little twist the market plays on you. Over the last few decades, if you miss just the 10 best days, 10 out of thousands, your total returns get chopped roughly in half. And those best days, they love to show up right next to the worst days, in the middle of the chaos. Exactly when the scared folks already ran for the exits. So panic selling isn't really a strategy. It's more of a generous donation from impatient investors to patient ones. And, hey, don't be the donation. All right, enough doom. What do you actually do? 3 moves. They're shockingly boring. That's how you know they work. Move 1. Do nothing. I know. Hardest one on the list. But stop opening the app every 20 minutes to watch the number go down. That's not investing. That's self-harm with extra steps. Your portfolio's a 30-year project, not a slot machine. Close the app. Go pet a dog. Move 2. If you've got automatic investing set up, keep it running. This is the part beginners get totally backwards. When the market's down, your same $200 buys more shares. Stocks are literally on sale and everybody's sprinting out of the store. It's a Black Friday where the crowd's running the wrong way. Your auto-invest just quietly grabs the deals while nobody's looking. Move 3. Check your foundation, not your balance. 2 questions. Do you have a little emergency fund, say a month of expenses? And are you clear of nasty high-interest debt? If it's yes, and yes, congrats, you don't need this money anytime soon. which means you can just wait. And waiting calmly through messy moments like this, that's not you doing nothing. That is the strategy. That's the whole game. One last thing before you go. Every quietly rich person you've ever heard of who built it slow and steady with index funds, they didn't get there by dodging the crashes. Nobody dodges the crashes. They got there because of what they did during them, which was basically nothing dramatic. They kept buying. They stayed calm, while everyone else panicked. These scary drops aren't the thing standing between you and wealth. They're the price of it. And so far in history, temporary, every single time. So don't panic sell. Keep that auto invest running. Make sure your foundation lets you ride it out. That's the playbook. That's it. You can stop holding your breath now. And listen, if I just talked you off the ledge today, do me one favor, hit subscribe. I'm James. This is Money on Paper, and I put out a new video every week that makes this money stuff actually make sense. No jargon, no hype, no guru nonsense. So if you want to stop being scared of your own bank account, you know what to do. And if this drop's got you thinking maybe it's finally time to start investing the right way, calmly I made a whole video on exactly that. It's right there. Go watch it. I'll see you in the next one.